Good evening, all. This is Shay Horowitz, ShogunTrading.com. This is our free weekly newsletter. Lots of stuff is going on right now, and the market is very fragile. The market is on a break point that is extremely important to us right now. On Thursday, we had a very positive day on the long side. Let me zoom in a little bit, and you can see this is Thursday. It looked like the market was bouncing off the support level, and everything looked like it. Market wants to go up. And then on Friday, job reports came out. I probably don't have to tell you about that, but unemployment, largest jump in 22 years, and oil surged up 11 points and so on. And pretty scary for the market. Now, as far as oil is concerned, I do believe most of it is speculation. I do believe that the best cure for high prices is high prices, because we are seeing right now places like Indonesia and India and places like that have been subsidizing their oil, that are getting really hurt by this expensive oil, and they're starting to cut down on their subsidies, and it's starting to cut down on their consumption. So we might see oil coming down just because it's high prices. What's amazing to me is that when oil broke $60 a barrel, everybody was up in arms. Everybody thought it was horrible, the end of the world. And when it broke 100, it was really the end of the world. And now oil is about to break, or broke 140. I don't exactly remember the exact price. And what actually limit up on Friday, and there's no upward. I mean, it's people are, $4 at the pump. Oh, I got to pay more gas, but I don't really see the upward. I figured people would be out in the streets, protesting it, but no one is really doing it. I guess we're too busy doing other things. I do believe that something needs to be done. That's my personal belief. I do think that we need to fight back against these high oil prices, and not necessarily by regulation, but by fighting back. And I'll leave the options up to someone that knows better than me. But besides that, we have other things to contend with. We have unemployment, and we have the housing market. Last week I told you about the housing market, and I told you about all of the housing stocks. For example, CTX broke. That's a stock I actually gave you last week. PHM is another stock that I gave you last week, and you can see these horizontal lines as our entry points. 1197. What was the one I just gave you? CTX, right? And you can see this one was at the $18 level. It's already down $2. So we gave you some really nice stock picks, and I told you last week that the way to battle lower real estate prices by making money on lower real estate prices, by going short on the housing stocks. And I've been telling you guys this for a long time, and we actually shorted all of these back when they were falling right around here, and I gave you all these trades. And I want to encourage you again not to get stuck on defending yourself right now, but get aggressive and actually make money to offset everything else. I mean, you can crawl into your cocoon and protect yourself, or you can go out there and offset gas prices, and offset housing prices, and so on, by actually trading and using your money wisely, instead of sticking it in the bank and letting it rot. So we've been doing very well with the financials. For example, we had the two commodity exchanges. The CME, that was really good for us, 451 down to 387. Actually, it was down even more than that. And we also had the NYMEX, which is another commodity exchange, all the way from the 90 down to the $83 level, actually $82 level. So we're doing pretty well on the financials. We also had Lehman Brothers, which is has been in the news quite a bit. This is our original entry point, 41.37, and we went all the way down to 28, which is quite tremendous on Lee. One of my favorites, and I keep rubbing that one in, is CRBC. We went short at 803. We entered at 768, and it went all the way down to 375, which is absolutely a tremendous trade. This is not the only stock that does that. It looks like a lot of the regional banks, the smaller banks, are really getting hit right now because of our credit crunch. As far as this week, we have pending home sales on the 9th. That means tomorrow. Could be interesting. We have crude inventories on the 11th. We have initial claims coming out on the 12th. We have CPI coming out as well, and the market is really paying attention to all these numbers right now. The Fed has signaled that they're done cutting rates, and that's going to be pretty interesting since the economy does need a boost. I mean, we need a serious boost right now, and we'll have to see what happens with that. But anyway, it's a very much of a news filled week. I do believe that the powers in Washington are going to come out this week with some kind of an announcement to help us out with oil prices, strategic reserve, whatever they do. I don't really care, but I do have a feeling they're going to do that. But from a trading standpoint, that means that we really have to watch out for that, because that can make the market go up in a straight line, and if you're short, you're going to get caught. So you might want to, first of all, use stops. Always use stops, and second of all, make sure that you're taking profits as you go. So as you're getting profits, scale out, scale out, scale out, scale out, just in order to protect yourself and protect your profits. Anyway, no new stock picks for this week. I'm going to try and shy away from that. I'm going to try and keep all the great stock picks for our paying members, because I think they deserve that. If you want stock picks, if you want to make money on these stocks, you have to sign up so we can deliver those stocks to you on a nightly basis. Anyway, have a great week, and I will talk to you next weekend. Take care.